I guess, 2008 when, Satoshi Nakamoto launched the Bitcoin blockchain, and obviously that's alive and well in its own capacity. But I think the hype cycle certainly around decentralized finance, I'm personally waiting it to finally and fully come to an end. I think the concept of decentralization, if you're looking at these public blockchains, I honestly don't know why anyone would consider that as an infrastructure that's potentially viable from a technology perspective. Again, some of it works, some of it doesn't. But from a governance perspective, it's very opaque. The legal infrastructure underneath it is basically missing in action. Some of these entities aren't even registered, they don't exist. The success of those services largely is arbitrage around existing regulation. And so, I've always said payments are super easy if you just ignore all the rules, right? That works very well. So
may not be the largest balance sheet. Someone who has a right product may not be the biggest bank on the street or the largest capital. Unbundling is best for the customer.
Maybe I'll speak on the fintech side. We have worked with them very closely. So two advice, maybe a recommendation. One is that focus on the cyber security risk, data protection. That's becoming more and more important. It can actually screw up your business model entirely if you're not on the right side of it. So that's one. Second, as founders, you have so many struggles in life, right? You juggle with hiring team, building products, building technology, and in somewhere in the realm of things, one forgets about compliance. And many people think like that we can build compliance later on. Let me first figure out getting business. But my suggestion is that build compliance as a part of the culture. As you deal with large institutions, I think, and then regulations are good. We are fortunate to have a regulator which is very proactive, supportive, and in many ways. So if you build compliance as a part of the culture, your navigation through the banking ecosystem, through the regulated landscape would be far more easier.
So compliance can't be an afterthought.
Just in the interest of time, two things. One, just building upon what Hitesh said, I just want to touch upon this whole cybersecurity piece, because from fintechs, if their solutions are there, eventually they're being used by corporates, either directly or through banks. Just wanted to share, we had a client survey across 3,500 customers in South and Southeast Asia. More than 30% of them said that cybersecurity is one of their top agenda and top priorities. So I just wanted to further, reiterate the point what Hitesh made, that building robust solutions, secure solutions, compliant solutions is absolutely important and critical. The other thing which I would say from a fintech's perspective, and I think we started on that note, that while there's a lot of innovation and I would say some really world-class solutions have been put forth by fintechs when it comes to retail payments, but there's still a lot of opportunity and a lot of problem statements out there when we talk about a corporate payment ecosystem, and not just small MSME corporates, but the entire I would say ecosystem, which also includes mid-sized to large corporates.
LLMs, right? And one needs to also make a choice, probably which one, whether you want to go Llama 3, Bloom, Palm, GPT-4 or whatever, what I mean. So there is also a kind of choices which are emerging, when which kind of LLM would be more suitable to a particular use case. Then comes, how do you fine tune that LLM basis your requirement, right? And then comes a layer of prompt engineering, and that's where a lot of people are working, right? I think building fundamental, foundational LLMs, I don't think one should spend time and energy. There are multiple of them available, open source. So the way we look at it is that, for one is, can we have a multi-LLM strategy? You can't be tied up or married to a one LLM, because this will keep evolving. So that's one. Second is, how do you build, you know, a prompt engineering layer which works for different use cases, right? And the multiple use cases, you know, like to give an example, I'm working on automating the entire credit appraisal process, you know, through, you know, one of the GenAI startups, right? So there are, you know,
in banks many years that MSME is the last segment that banks will think of from advising. The more inefficient they are, the better it is for the bank. So I just want to know what sort of changes you see is happening in that sphere, because they are the ones who really need the advice and the technology. The second is who pays for the innovation. We talked about innovation because being on the vendor side, I find banks squeeze vendors in terms of when they want to bring new innovation. So who pays for innovation? And last is really about the interoperability. You know, like telecom companies have done quite well in terms of from a regulator push to go ahead and make it interoperable for you to switch from one telecom company to the other. What about the banking? I feel there's some inertia for banks to really support that, because it just means that if they give bad service, then customer can quickly move away to a competition. Thanks.
Let me take the first one. I think the MSME and SME is the darling of all banks today. If you really see, and I can speak on behalf of most of the banks, the largest growth that we are seeing is in the asset growth is in lending to SME and MSME, and that's, I must also say that is probably the least profitable business because they are all unrated, so one doesn't get the benefit of rating of corporates, capital charge is higher. But that's the growth, and why banks are investing in this is, and banks are not just lending, it's a complete ecosystem banking that we provide to those segments, which includes their banking their families, their vendors, their customers, their employees, everything. And some part of they don't really need advice like a large investment banker would be providing to a large corporate, but they need advice on a more some kind of transitioning new areas to invest, etc., which those same SME banker, because they deal with similar segments across industries and in the same sector with across multiple corporates, so they themselves provide those services.
Things which are kind of moving towards that data belongs to the customer. Customer is the custodian of, we are the custodian of the data. Data belongs to the customer, and at the will and at the wish of customer, data can be shared amongst the financial institution. So there are a lot more platforms and systems which are kind of becoming interoperable. Right?
Where do you think, what would be the next modes of payments or next use cases, form factor, whatever, how do you want to paint out? And especially, I'll probably go to Anurag first to begin with. And given that you guys work, you run payments across the globe, is there any other global trend which is happening which we're missing in India, which we can implement?
That's a great question. It's very interesting, right? A few years back, we used to think account-to-account transfer is a distant dream. It's not something which is going to happen. UPI happened here, and now we are in this UPI stage and just thinking about what next. Honestly speaking, it's very difficult to say that can there be something beyond, but there would be. Adaptation, innovation would keep on happening, but it will happen across four main things according to me. Convenience, ease, speed, and security. Now, basis this, what therefore would be the new form factors or what would be the new payment methods? I think the UPI is to evolve into further products, further types, followed by the new generation wants things to be convenient, right? So it's important that the form factor actually will move to phone-to-phone payments, biometric enabled or authenticated contactless payments, B2B cross-border.
I represent Diners Club here, and the entire payments industry kind of started when a gentleman forgot his wallet when he went for dinner. Just about 75 years back, so just shamelessly plugging, we are celebrating 75 years of Diners Club next February in the same place where that incident happened in New York. Coming most omnipresent program we have is lounges in credit cards. Everyone uses lounges. we saw the queues outside lounges. But traditionally, and this is not now, many decades, Diners Club traditionally has stood for lounges. It's a value proposition we'd have probably for now 3 decades or more, and we've not changed it. That card, you don't need an additional priority pass or things like that. So consistency is the key. Also then moving on to how do you target new segments, and Anurag mentioned, Pankaj mentioned SMEs. Now, it will be surprising, India is a land of SMEs. There are very few super premium products catering to SMEs on cards. We launched actually the first metal card on SMEs, which is called the Biz Black. And it was targeted specifically in upscale SME with programs, with rewards, and the startup ecosystem, because they were the
India's cross-border e-commerce market is 20% of the global e-commerce market. India is also a very large recipient of retail remittances, the world over, at around 124 billion. The inward remittances today are almost 14% of the global remittances, and at 27 billion, even outward remittances are growing at a CAGR of 25%. So, we have favorable demographics. We have a very meaningful MSME sector. So all of this makes India a very attractive destination, not only for receiving, but also for sending out monies, which is what e-commerce is going to leverage, and that's what we're going to see in the coming years. I'll talk a little bit more about what's happening today in the e-commerce space. Traditionally, payments in India, especially the cross-border payments, have been dominated by SWIFT, if you look at the B2B segment. And if you look at the B2C and P2P, they have been dominated by money service bureaus or credit cards. If you look at India alone, in India, besides the 100 million credit cards that you have, you also need to tap the 1 billion plus debit cards and UPI users to actually, try and push and drive commerce. Giving rise to a lot of new use cases in e-commerce. And if I want to talk about some of them, you have the travel aggregator space, you have the digital goods space, which is dominated by big techs. You have your SaaS flows. You also have the emerging medical tourism and education flows. And we have the erstwhile OPGSP guidelines and the newly enabled PACP guidelines, which are actually driving e-commerce in the country today.
Will definitely go down. Today, the cost of cross-border payments is significantly high. That is going to go down. On the other axis, I think the speed is going to increase. Now, whether that happens through competition of UPI, tying up with multiple countries and then forcing others to reduce the cost or things like that, or equivalent of that, but those trends are there, and I think cross-border space in next 5 years would have its own UPI moment. I think it's going through its own UPI moment. In next 5 years, it will look a very different space compared to what it is today.
Awesome. We want to summarize this. This was FPN, free, perfect, now. These are the 3 things that customers wanted. I think some changes have happened there. Now it is, I think, PCP and 1T is also got added, and I'll just come to that abbreviation. So where, the FPN, the PNN stays, perfect, and now people want it even today. But P, C and T, P is for personalization, C is for convenience, and they want to deal with a trustworthy service partner. Platforms that are, and I'm calling them platforms which are more verticalized, I think in my assessment, versus a platform which has the width, which serves the customers, let's say asset protection, investment, transaction and asset creation need in the FS space. I think there is a higher probability of success is what I will say. And when I say that, so people want, your platform to also be visible. So I think the call, at least at our end, was taken that we need to create an omnichannel platform where people can see us also and experience us also, digitally. When you do this, and when you have a width of offering, the surface area of conversation is also increasing with the customer clearly. It has its own challenges, of course, and when you talk about personalization specifically, you spoke about it earlier as well. When you have a plethora of information coming about a customer, your ability to personalize definitely increases versus being a verticalized way of looking at the customer. So I think for applications like us, which are non-banks, I think it was very important for us, to get the transaction layer also into the platform. Otherwise, most of the other products that we had were, typically monthly, quarterly, annual engagement opportunity. So I think payment gives that opportunity, where transactions gives it a daily, hourly, kind of an opportunity to engage, with the customers. So that was the genesis of also, having transactions within our platform. On the other side, of course, when you do this width versus depth, I think you have to be best at that category as well. So that's the challenge which comes in. There's also multiple regulators that you have to deal with when you're dealing with so many categories. So that's another challenge that you have to keep looking at. And of course the regulations which also come with multiple categories. So in my assessment,
Pankaj spoke about how a payment or a finance app is going to widen to become a super app. But one other trend that we're seeing across all of our corporates is that large conglomerates are actually looking at super apps to offer one face to the customer for all of their consumer facing verticals. You have large conglomerates such as Reliance, Adani, then you have Tatas. They're merging their consumer facing businesses so that they can have one brand and they can offer a unified solution to their customers. This is also a statement that all of these businesses are now becoming more and more digital. So that
and they have been around constantly calling a new category every now and then. But welcome to the panel. I'm going to be the host, so no questions can be asked to me. Let's start with...
That depends on the panel. You behave as good boys or...
We'll see. We'll start with you, Shavendra. Can you please demystify what, according to Peak 15 or according to you, is the word fintech? And how do you classify this industry in the way you see it?
Think of fintech. Look, there's two big counters sitting on one either side, and the head of our very esteemed regulatory of NPCI. So I feel we should ask this question of other people. I'll just give my quick context of how I think about it as an investor. I think fintechs try to offer 4 key propositions, and all companies fall in somewhere in this bucket. And at least that's how we think of it. We think of flow-based businesses, which are payments businesses, which provide the proposition of moving money or the transfer of value. We think of stock-based businesses, which have balance sheets. They may involve lending, NBFCs, banks, and so on. We think of software-based businesses, which provide infrastructure for everything else to happen. And we think of workflows as a key enabler. So workflows might be enabled by software, workflows may involve the flow of money, or workflows may involve the creation of a balance sheet, etc. But all the propositions eventually boil down to these 4 areas, and we constantly look for new ways that companies can address the needs of their target customer. It could be consumers or merchants that will try to build around these 4 vectors.
You've been now in NPCI for 15 plus years. You've seen this ecosystem develop right literally on the front row, and I'm curious to get your perspective that, like, we are at 2024, 10 years from now, what all possibilities we can imagine in a metaphorical way. You had spoken to me about tokens, you have spoken to me about how we can do many things significantly more efficiently than they are done today. But can you just give a vision? It doesn't have to be all from NPCI. Like, if you say India FinTech, we are in Global FinTech Festival 10 years from now, what all is possible?
Yeah, we have been working very hard to see how do we increase the speed of money, right? And I believe the similar principle what happened with money will happen with the other assets. That's given, right? Now the question is, whether tokenization is the way out or there is some other technology, I don't know at this stage. But I believe as of now that looking at the way things are happening in the Western world, it might take that route, and the time, effort, and the cost would actually dramatically change to move the other assets like money in due course. The Western world, where crypto powers the decentralized finance, India has an opportunity to create a CBDC powered decentralized finance system.
We are all fans of everything that NPCI does. It just keeps us busy all the time. I tell my team that our 2 years roadmap is defined by Dilip. They can talk to me for the year 3.
Investing in India, India's GDP was 850 billion. This year it's going to be 4 trillion. This is GDP, all of India's GDP, 4 trillion. And we are not yet on 2 decades, just shy of 2 decades, almost 4.5 times, 5 times. Digital advertising in India that year was 39 billion. All of India's digital advertising. iPhone wasn't yet launched. How big companies can become, but I can give you a very simple mental exercise, very super simple. Let's assume that both these companies here on my right and left can grow 20% a year for 15 years. That's not a lot, 20%. Both are growing faster. 20% a year for 15 years is 15 times. 20% a year for 20 years is roughly 38 times. So let's say 15 to 20 years you could compound that. Each of these businesses would basically be north of $5 billion in revenues in 15 years. Approximately order of magnitude. And a $5 billion revenue company today is hard to imagine, like in India.
But have credit to take off on UPI as well. How do you envision UPI 5 years from now that we have kind of gotten to the scale? It probably does more transactions than most networks in the world already.
So while a lot has been done, a lot more needs to be done. Right? That's the way NPCI looks at it, and I've spoken about it before as well. We are looking at 100 billion is a possible number that India should look at, right? And I don't know, it takes 10 years, 15 years, but 100 billion is a number, it's a potential for India. And I've done this math before as well, right? The 3x increase in the merchant side, 3x increase in the consumer side. Today is a 9x multiplied effect, right? If you look at it, it is absolutely going to be the backbone of this growth. We have launched now CRED 9 in just a couple of weeks back. We released the commercials, and I think the small ticket credit, high frequency credit is going to be really important for us to reach to that particular goal. This recurring payments, the mandate QRs, the EMI QRs, those are the stories which will drive that usage, because today it's very tedious and physical process to adopt anything on the outlets, organized retail, unorganized retail, and I think that is the area where companies like Pine Labs have a huge scope to drive a software-driven innovation instead of looking at a fixed infrastructure and those kind of things. I think we keep talking about it a lot, and I hope Pine Labs will drive more than physical to a software-driven approach where it can be contextual, where it can be demand-driven, where it can be real-time, right? I think that's the way I look at it. The third thing what I look at it is, obviously, while we talk about, today we do about 1 billion consumer-driven transactions, right? And which is 500 million financial, 500 million non-financial. And it keeps running in RBI discussion as well, that how do we actually scale up the capability to process this large amount of transactions. So I think there has to be more efficient way to deal with that top. We have done something called offline transactions and those kind of things. So I think, but we still have to really get into the scale to drive, in a truly decentralized, distributed way. The transactions are happening and we only get to know in a near real-time basis instead of real-time basis. So I think now there has to be a journey from a real-time to near real-time in my assessment, because otherwise the scale what we are staring at is unimaginable.
Perfect. Your fintech founders, in our view, fintech is a precision business. Okay, it is not a speed business that you try to build scale. So, and in our opinion, what happens is when financial services or fin meets tech, a lot of tech founders build these fintech companies. They try to build them the way of tech, which is grow very fast and raise a lot of money and so on. But actually, those are not the principles of financial services. The principles of financial services are much more precision centered. And so our view is, fintech should be built with a multi-decade horizon. Fintechs are not normally winner take all. All regulators want multiple market participants. They want a healthy, competing set, and they want consumers or merchant stakeholders to be served well by competition. So these businesses have to be built thoughtfully, in our view, Kunal, and not be try to build with blitz scaling or tech type DNA, but with a balanced DNA. Like I said, we always look for precision in fintech. Sharp proposition. If it's underwriting, very sharp underwriting, disciplined execution, and so on. And we don't look for speed and velocity in that type of mindset in the founders we try to back. So I hope that's helpful.
Do you see the largest opportunity still not captured? And when it comes to, let's say, merchant and consumer worlds are still not fully integrated in some ways. So what are the pending opportunities that you see that are still big to be captured?
See, I think speed of credit delivery, second is cost of credit delivery, and third is the trust in credit delivery. So if you don't know enough about the consumer, and if you can't lend to the consumer, there's a problem. It is taking you too much time and cost to get the money back. Credit will not flow, and the similar thing is that disbursal takes time. Look, it took HDFC Bank 25 years to build a book of the size and scale that they have built. It has taken about 12 to 15 years for Bajaj Finance to build a business of that kind. I think a fintech which can deliver to all of these three areas, which is deliver credit quickly, collections is becoming seamless, and at the same time has a very high trust score when it comes to delivery of credit, I think it has solved for all of these things. And we are getting to see that in businesses, for example yours also, where credit is being delivered at a very low cost, but at the same time it's a high quality credit. So first of all, I think we have started on that journey. I still believe that Indian consumer hasn't really adopted to credit and hasn't adopted to credit to help personal growth, personal growth, consumption growth, and economic growth. As we start to see Indian consumer use credit to better their own lives and the ecosystem around them, I think the Indian economy will benefit. It's a classic question around capitalism and socialism that says, if the consumption cycle increases, we as a company are going to go and we as a country are going to go and do well. I don't think so that has taken off enough right now. I think there's a lot more to be done to deliver credit to drive consumption in our economy today.
The users, and also share what do you think CRED becomes in 10-15 years. I think people will be pretty interested to know what you're thinking about that. Yeah, so sorry for disrupting some of your flow, but I think we need to hear from you.
Perfect. How many of you over here use CRED? Thank you. Close to 70% market share. Not bad. The rest of you, please talk to the people around you and get on.
How many of you use CRED for UPI?
Sometimes.
This is the market share.
Okay. We had less than 2 transactions per credit card customer in India on UPI when we started in 2018. Now, credit card customers who do a lot of transactions on credit card do close to 27 transactions on UPI every month. So that tells you that it's a very unique customer base that seems to also be on credit card and UPI as well. But just to explain CRED, I had built FlipCharge before, and all of you were part of the journey in some ways. You from Euronet, you were an investor in some capacity, and you were the key investor in the company. We realized that India's credit relationship was somewhat messed up. We were heavily penalizing customers for missing a bill or missing a due date or over leveraging themselves, but nobody was rewarding them for good financial behavior. We realized that if we create a platform that reminds people to be responsible with credit and ensure that they're paying the bills on time, and create some kind of a recognition or reward mechanism for that, it should create a good thing. Fast forward in the journey, we are a dominant player in this category where most customers use CRED to rely on CRED to remind them of paying the bills on time and on top of that. So that's a way for us to acquire customers. But we actually wanted to build a unique ecosystem for the credit-worthy customers and kind of build multiple things on top of that. We never thought of ourselves limited to being a fintech. We see ourselves as an audience play. So we are focusing on the top 25 million families of India and building many services for them. We recently launched a product called as Garage, where we allowed consumers to manage their cars on our platform, and we managed to cross close to 5-6 million vehicles in less than a year on the platform, and it makes managing cars better. And one of the most useful features that people find on our platform is challans. A lot of us drive and not know that we've got challans, and a lot of people use that. We've not figured out how to do BBBS on top of that and get the challan paid on our platform yet. That's a task for you. Yeah, please note down. What we have managed to do is build a very large-scale business where we have a large merchant payments business. We have a large business where banks and NBFCs use to cross-sell their loan products on our thing. We are probably the largest in that category in terms of cross-selling. We are also a business where we have a small commerce business that we built on top of that, a decent-sized insurance business, and a lot of merchants actually pay us to list themselves, and it becomes a reward on our platform. So we are building a unique company. It's very hard to explain what CRED is, but Dilip and I were fortunate to have dinner with the governor from US, and it was fascinating. He's like, this product is not even there in the US, and it should be there. And just to compare, they have probably $1.5 trillion of credit card spends and no app to manage their credit cards. That answers your question.
No, thank you.
That I believe that AI will not happen till the CEO or the founder of the company becomes the chief AI officer versus expecting somebody in the team to step up and do something. So it's one of those changes which can really accelerate you into the future, or you could be potentially impacted by it. I will just park one concern. I believe that as a country, one of the concerning factor remains is the female participation of labor. We cannot become a prosperous country with just one gender contributing to the economy. We need to find a way to change this dynamic. No country has become prosperous with one gender working. We have to figure out a way to make that impact happen. Today, 90% of all financial products in India are only used by men. And this is something that unless we all collectively work to change, we are not going to get accelerated to Viksit Bharat. Cool.
Payment Express has been built with high capacity, low latency and high availability at its core, which allows our client to accept, hold and pay at scale. With Payment Express, we'll be able to give our clients 99.99% uptime, and it is scalable up to 5,000 TPS, and we promise our clients to process their payments in less than 2 to 3 seconds. This is the power and prowess of the system that we have built. What you see right now on your screen is the UI of a gig economy app, right, where the gig economy player is allowing their earners to basically redeem their salary real time on demand. Once he selects the amount that he needs to withdraw, let's say $20 in this case, and the moment he presses the button, make withdrawal, that's when the real magic happens, right? We have done it, we have processed the transaction in less than a second for this particular client and for this customer. His earner would have received this salary or this tip into his account in less than a second. First is the gig economy industry driver payout. Second is an automobile industry wanting to make a real-time incentive payouts to the dealer and the mechanics. The fourth one is basically a validation aggregator doing bulk validations for the account. And the last is a marketplace client who's wanting to make merchant payouts in real time. And as you can see, they can have varied TPS requirements ranging from 10, 20, 40 to 50, right? And as they are processing transactions, you can see that we have been able to process at transaction at a capacity of 110 seconds, 110 TPS, and each of these transactions are getting successfully processed in less than 1 second.
The inter-regulatory protocol is something that I think the world needs to gradually move towards converging on, and it's not just around one single area. I'll quote Angad to go and say it has to be embedded across the customer journey. Just to take forward the analogy that Kiran gave of SWIFT being the default processing rails, that is kind of like the airport. But today if you have to send money abroad, it's more like somebody traveling from a village in one country to another village somewhere else. They have to walk to the nearest bus stand, they have to take an overnight bus to the nearest airport, then take a flight, then have a layover somewhere with a connectivity onto another airline, then go to another country, then get off, then take another bus to another village, and then walk to their destination. That's how cumbersome actually sending money abroad is. So while one leg can be optimized, which is what I think Swift and Kiran and team have done a great job in the flight being made into a 1-hour flight, but the entire journey for an individual still takes that long and has to pay everybody across the leg. So it is important when you look at, therefore, inter-regulatory protocols across various sides of the border to have it cut across the entire customer journey and embedded into the core journey. As an example, today, and what does the customer journey mean? It starts with first customer onboarding. What is the reality today? When you apply for a financial product in one particular country, you have to be checked and verified for KYC, AML, sanctions, regulations in that particular country. And then you avail of a financial product. If you go to another country and want to avail of a financial product there, you're treated as a completely new customer with no history whatsoever, and the entire chain of KYC, AML, sanctions checks has to be done all over again based on someone else's regulation. That's the reality today, which is really cumbersome for a global citizen who wishes to be able to transact seamlessly across borders. Now, what we do at Revolut, as an example, is when we're onboarding a customer in any country, we have a proprietary financial crime solution, where we check for every individual. Even if you're in India, we check for KYC, AML norms that actually are pertinent across the entire world.
To understand what content is for. And I see content is to first entertain. That's what everybody looks at content for: entertainment, education. It's also for excitement, exciting to the consumers to look at your value prop and bring them onto your site, your traffic, all this stuff. Finally, great engagement. And all these things have to be done. It can't be done in a way that it is common for everybody. What is exciting to me, what is engaging to me is definitely not what is going to be exciting to, say, for example, people sitting there in the first row. So it's different for different people, and what is going to be the one which is going to be the theme is something which will help you personalize this content to the audience.
Okay, what does a king's role is defining things and giving it the rules, right? Okay, that's what kings used to do, right? Queen's job was to ensure the things get implemented in the right possible manner. And that is what we are going to be talking about. how Queen is extremely important, and nowadays Queens are so much more powerful to be able to support the King to go to the next level. That is my little take on this topic.
Super interesting. Pramod sir.
So actually we are talking in the context of GenAI. In that context, if we talk about, then the Queen is definitely the data on which the model has been trained. Because the data underlying defines what the content will be. So I think for me, the training data set is very important on this model. So that is basically the key.
Great. I think that's a good baselining. So I have been building in the generative AI space for last 6-7 months, and my CTO keeps talking about the transformation from machine learning models to transformers at Google, and then ChatGPT came about 21-22 months ago, and then there's a lot of stuff being built in the application layer. I think in the BFSI industry, which is usually the first adopter of technology, right? This is also not going to be very different. We have seen Morgan Stanley, Klarna, etc. already, having some wonderful use cases. I wanted to, first start this panel by just sort of talking about what is the evolution you have seen, what is new, what is old, and how excited are you guys?
See, I just want to differentiate between AI and GenAI. AI has been there from the time, I don't know what, 60s, 70s, 80s. I did engineering, I passed out in 91. I had AI as a subject in engineering. So usage of models inside banking as well as in every other industry has been there for a long period of time. At HDFC Bank, we have used it in credit analytics, fraud and risk analytics, risk management, and marketing analytics, of course, in terms of predicting what is the customer looking for from the next version and all those stuff. BFSI, because of the first party data that it had and the phenomenal amount of actual data, it didn't have to go outside and look for data that is there in the wide world and try and use unstructured data to create and understand consumers. GenAI today is where we see that possibility coming in for a lot of people. And when it comes to GenAI, I see this as teenage kids talking about sex. Everybody seems to know everything. Everybody has done everything, but the reality is nobody has done anything. So GenAI is in that kind of a stage when it comes to organization. Everybody is trying for a lot of things, trying to understand what are the contours of it, what is safe, what is not safe, what is data sovereignty is coming into place, data privacy is coming into place. People are trying to test waters. It's a long way off in my view.
Consumers and employees alike are essential steps towards building a secure digital economy. As a regulator, I have to emphasize these aspects on behalf of the Reserve Bank, while at the same time reiterating our continued commitment to promote innovation. Priority 4 is sustainable finance. Long-term economic stability needs prioritization of sustainable finance, sustainable growth, and environmental preservation. India's commitment to environmental preservation is enshrined in Article 48A of the Constitution of India. From a financial sector perspective, we meaning the Reserve Bank, we have taken steps for ensuring sustainability with recent initiatives like Sovereign Green Bonds Framework of India in 2022 and the Framework for Acceptance of Green Deposits in 2023. These frameworks are expected to play an important role in financing green projects, incentivizing sustainable practices and lowering societal costs of development. Despite their benefits, green bond and green deposit frameworks nonetheless face several challenges. They include scalability, as the market for green bonds needs to expand significantly to attract larger issuances and diverse set of investors. Ensuring authenticity and impact of green projects financed through these frameworks requires robust monitoring and reporting mechanisms. Technology can play a pivotal role in overcoming these challenges. Blockchain technology, for instance, can enhance transparency and traceability in green bond issuances and provide immutable records of project impacts. artificial intelligence and big data analytics could enable banks and investors to assess environmental risks and opportunities associated with their green investments. Fintech innovations such as digital platforms for trading green bonds and impact measurement tools can streamline processes and attract a broader investor base. Looking ahead over the next 2 decades, fintechs will be instrumental in driving the progress in transition finance, climate finance, and nature-based solutions. India can accelerate its transition towards a resilient and low-carbon economy. We have to put our heads together to achieve sustainable growth and environmental stewardship for the future generations. India has engaged actively in international fora and bilateral agreements to foster economic cooperation with many countries. Going forward, strengthening financial infrastructure, including cross-border payment systems, will be our key focus areas. India, with its tech talent and evolved financial fintech ecosystem, holds the potential to serve as a global hub for digital innovation and fintech startups. Building and strengthening strategic partnerships, reinforcing our commitment to international cooperation, developing institutions of excellence in the areas of technology and innovation across a wide spectrum of areas including financial services would give the right impetus for our journey towards 2047. Based on encouraging response we have received from several jurisdictions, we are now focusing on making the UPI and the RuPay truly global. The deployment of UPI-like infrastructure in foreign jurisdictions, facilitating QR code-based payment acceptance through UPI apps at international merchant locations, and interlinking UPI with fast payment systems in other countries for cross-border remittances are on top of our agenda. Notable progress in this direction has already been made with countries like Bhutan, Nepal, Sri Lanka, Singapore, the UAE, Mauritius, Namibia, Peru, France, and a few other countries. India's CBDC, which is in pilot stage, is another example of possible international cooperation. We are now utilizing features like programmability to provide credit or government assistance to landless tenant farmers and carbon credits to farmers through CBDC. While we have successfully demonstrated the interoperability of CBDC with retail fast payment systems like the UPI, we continue to gain from our experimentation on offline solutions. As we make progress, we would be happy to cooperate with other nations in their CBDC efforts. What I say, priorities for India at 100. The second, looking towards the future of India's financial landscape, the integration of cutting-edge technologies promises transformative advantages across various facets of our life. Artificial intelligence and machine learning are poised to revolutionize financial services in unprecedented ways. AI algorithms are already being deployed for fraud detection. Machine learning models are increasingly being employed in credit scoring, leveraging predictive analytics to assess creditworthiness and expand access to credit. AI-driven chatbots and virtual assistants are steadily enhancing customer service experience by providing personalized recommendations, resolving queries promptly, and improving overall satisfaction. As AI and ML capabilities continue to evolve, their potential applications in regulatory compliance, investment advisory services, and algorithmic trading are expected to further redefine the financial landscape. Simultaneously, we should also fully understand the risks posed by AI and facilitate calibrated and responsible adoption. Players in the financial sector, central banks, and governments should facilitate development of trustworthy AI, keeping in mind the concerns surrounding data privacy, explainability, accountability, and transparency. What can be a desirable model for governing technologies by AI may perhaps be a key issue for discussion among the experts assembled here and in the next 2 days. Now, the Internet of Things represents, that is IoT, represents another frontier of opportunity for the financial sector. IoT devices embedded with sensors and connectivity capabilities are reshaping the payments ecosystem by enabling seamless transactions through connected devices such as wearables and smart appliances. Further, IoT-driven data analytics offer insurers real-time insights into policyholders' behavior and risk profiles. They can facilitate personalized insurance offerings and dynamic pricing models. IoT-enabled devices in supply chain finance and asset tracking have the capacity to streamline operations, enhance transparency, and mitigate risks. As computing holds great promise as a game-changing technology with profound implications for cryptography, financial modeling, and risk management. Its potential to perform complex calculations at great speed and scale poses both opportunities and challenges. In cryptography, quantum-resistant algorithms are being developed to safeguard sensitive financial data from quantum-enabled cyber threats. Coupled with our commitment to financial inclusion, sustainability, and consumer protection, sets a robust foundation for the future. The seamless integration of emerging technologies will further redefine the financial landscape. Let us embrace this dynamic era with a collective vision and collaborative spirit to ensure that India's financial ecosystem not only meets the aspirations of our people, but also sets a global benchmark for innovation and growth. Thank you very much for your patient hearing. Namaskar.
Easy to set up UPI auto pay. So easy to do an IPO. In fact, I think about 50% of IPOs are using the ASBA platform, using UPI to reserve money. So what you're seeing is all these combinatorial things happening, which have a direct impact on the economy, on economic growth and participation. And so once again, I'm very happy to be here. It's always a pleasure to come here, GFF once a year. You get a shot of energy, you can go back and come back a year later. And every year there are new innovations from NPCI. You'll see 2 more today. All the best to them. Thank you.
With us, a leading software organization which is supported by Yes Bank. We also have Eastbus and we also have Habit, which is supported by Axis Bank here with us. And we will see how the businesses are using these multiple applications, and we'll go for a live demonstration of interoperability with these applications. We'll see. So let's start. We also have a customer with us who is using these applications. So for Zoho, we have a customer by the name of Highland Valley, which is into interior designing, interior furniture, right? And what they're going to do is they're going to raise an invoice through Zoho application. So let's start this process. Can I request Mr. Highland Valley to raise an invoice? First, starting through the B2B ID. So Aditi, B2B ID, B2B.
After they receive the invoice, the business has the choice to accept or reject the invoice. As we refresh the status, you would see it has 3 actions to do: reject, return, or accept. In this case, SRD Media accepts the invoice and it becomes a part of their accounting transactions. With true interoperability, as we see, 2 platforms are talking to each other with a simple invoice. Rajiv, in this entire flow, why don't we just do a live transaction of payment as well?
Yes, we'll get right into it. We can also see on the Zoho screen that the status has changed to invoice accepted. Okay. Yes, we can get into a payment. As you know, Bharat Bill is a payment agnostic platform. You can use NEFT, IMPS, UPI. So let's go for it.
Absolutely. So in this case, businesses can have various requirements, high value to low value. In this case, the value being small, we are going to do a payment through a QR code. A QR code is generated, payment method is selected, business authentication is done in this case, and a payment is authorized for an invoice to be paid in real time. While this payment is being made, and we see that the payment is successful. Onboarded on CRED for invoicing, for invoice financing. They are going to select an invoice which has been raised by Zoho and is showing outstanding in their books of accounts. The invoice is selected using a B2B ID. All the business details are put in here and applied for. In this entire process, this is a real-time invoice financing process, and here the business goes for choosing the CRED's partner which they want to. In this case, it's M1 Exchange and Invoice Smart. It is applied for, a repayment date is selected, and final application is made. Businesses have various needs, there's seasonality, cyclicity, everything needs to be taken care of. Our financing partners ensure that such business needs are made through either capital requirements or cash flow requirements. All of these are met through our financing, and here we have the invoice has been submitted for financing. Can we actually get the bids as well? When the invoice has been submitted, if we refresh the screen, we will see there are multiple bids which have come to the business. Let's view the bids. In the bids, we have one by M1 Exchange, one by Invoice Smart. Businesses have the choice of either accepting or rejecting the bid. In this case, the business is accepting the bid for M1 Exchange, which is most beneficial, and here they confirm in real time for an invoice financing. Business can have various needs, and their needs can be met in real time to the businesses. Can we check for a confirmation?
We can check on Zoho application whether they have received the confirmation. Mr. Hai.
Universe. This universe has 400 million consumers already part of the UPI universe. We're going to be adding another 300 million more users to this universe. We have a strong ecosystem of 5 crore merchants in this universe. The UPI universe is easy, instant, and most important, safe. That's the UPI universe. The rules of the UPI universe are very, very simple.
Finance Bank. I also please invite Shri Anand Nagarasi from SMC Bank. I also invite the Tamil Nadu Mercantile Bank, Srimati